In the last section, we built a settlement-level reconciliation view using Claude AI for Excel, bringing paid claims and outstanding reserves together, flagging under-reserved positions, and ranking every settlement by incurred loss. That answered the first question: are my claims figures and finance figures telling the same story? Now the second question, and this one is specific to how the London market works. When a loss is settled across a co-insured program, do you know exactly what your client owes versus what the syndicate stack is absorbing? To answer that, we need to talk about apportionment. In the London market, a single risk is rarely placed with one insurer. A property risk, a marine cargo program, a professional liability tower, each placed across multiple insurers, each taking a percentage line. That is co-insurance. And when a claim comes in, the settlement involves a series of allocated payments, each insurer paying their share. Alongside that, you have client-specific payments, third-party trust flows, and commission allocations, all happening simultaneously, all needing to be tracked separately. The field that captures all of this is ApportionmentPaidClaim. It answers, how much was driven by the market apportionment process? How much went directly to the client? How much moved through trust accounts? Without that answer, you cannot produce an accurate claims bordereaux, tell each co-insurer their share, or demonstrate to your client that what they received matches what the program was obligated to pay. Let me show you how Claude AI for Excel handles this. In 2 prompts. Let me type the first prompt now. Compare ApportionmentPaidClaim against PaidClaim for each settlement ID. Where ApportionmentPaidClaim exceeds PaidClaim, flag these rows and provide a summary count and total value. What Claude has produced is a settlement-by-settlement comparison with flagged rows clearly identified and a summary count and total value at the bottom. When the apportioned amount consistently exceeds the direct payment, it signals one of 3 things: a timing difference, a data quality issue, or a structural anomaly in the placement. Each requires a different response, but you cannot investigate until you can see the pattern. That is exactly what this prompt has given us, in seconds, not hours. Now let's go one level deeper. Knowing the apportioned amount differs from the direct payment is useful, but what I really want to understand is the composition of the total paid claim. Specifically, how much was a direct client payment and how much moved through third-party trust accounts. This is where ApportionmentPaidClaim and PaidClaim TP come in, and together they give us a payment split that is central to bordereaux reporting and co-insurer reconciliation. Let me paste in the second prompt. Produce a breakdown showing the split between direct client payments, apportionment client paid claim, and third-party payments, PaidClaim TP, as a percentage of total paid claims per settlement. And there it is. For each settlement, Claude has calculated what proportion of the total paid claim was a direct client apportionment, and what proportion moved through third-party trust accounts, each expressed as a percentage of paid claim. That third-party percentage is directly relevant to Lloyd's Trust Fund compliance. Money moving through premium trust fund accounts needs to be identifiable and reconcilable at all times. And the client payment percentage is exactly what should feed a client's claims experience report at renewal, produced from clean data, not assembled by hand the night before. 2 numbers per settlement across 2,000 rows, 1 prompt. Let me pause here because it's worth being clear about what we've just shown. Apportionment is one of the most complex areas of London markets data, not because co-insurance is hard to understand. The concept is simple. It's complex because the underlying data sits across multiple tables, uses posting codes and account flags invisible to anyone outside the model, and produces payments flowing in several directions at once. We've just collapsed all of that into two clean outputs using two prompts in Claude AI for Excel. Next, we'll move to Trust Account, monitoring Lloyd's compliance and demonstrating that trust fund movements are clean and audit ready. But first, a quick word on what's sitting underneath everything we've done. You might be wondering, where does data engineering fit in? Claude took two prompts and gave us the answer. So what's the data engineer's role? Well, none of this works unless the data has already been modeled correctly. ApportionmentPaidClaim doesn't exist in source data. It is the output of a structured data layer joining 7 tables, each one encoding specific business logic. What counts as a claim versus a fee, what distinguishes a credit account from a trust account, what defines a client-specific apportionment. That logic is designed, written, and tested long before anyone opens Excel. The data engineer builds and maintains that layer, shaping raw transactional data so every column means one consistent thing every time across 2,000 settlements. Once that foundation exists, Claude AI becomes transformative. An analyst or a finance director can ask questions in plain English and get accurate answers because the hard work of defining the data is already done. Claude did not magically understand apportionment paid claim. It understood it because data engineering gave that column a precise, consistent definition. The prompt is easy, the column meaning exactly what it says every time. That is the hard part. That is data engineering. That is the heart of this channel. Not replacing data engineers with AI. It is engineers building the right foundations, then using Claude AI to put accurate analytics directly into people's hands. Before you go, everything you have just seen is available for you to use right now. Click on the link in the description and you'll get the exact prompts I used across this entire series, word for word, covering claims reconciliation, co-insurance apportionment, trust account monitoring, funds withheld tracking, fee segregation, and portfolio reporting, so you can run the same analysis on your own claims data without starting from scratch. You'll get the data model that sits underneath it all, the structured claims view that tells Claude AI for Excel exactly what every field means, from paid claim and outstanding through to the apportionment and trust account fields, and why every number it produces can be trusted. You'll also get the dataset itself, 2,000 settlements of precisely modeled claims data, so you can see the outputs before you ever connect your own systems. Everything is in the description. One click, no cost, just the tools you need to make sure your claims data is always telling you the truth.